Hey, good afternoon, everybody. How's it going? Or maybe good morning for some folks. West Coast, good morning to you. East Coast, hope you're enjoying your lunch. Well, we better make sure, is there charts and sound? Anybody out there? Hello, hello, hello. There we go. Thanks, Mike. Appreciate it. Thank you very much. Dean, Aaron, thank you, thank you, thank you, thank you. Ron. All right, so if you guys were in the sound of my voice a little while ago, you probably heard some excitement. I'm kind of excited about this. Um, um, I made kind of a little discovery, which you guys, I don't know, you guys might not think it's a big deal. For me, it's a big deal for me. Anyway, kind of cool. We're going to go over it. I'm going to show you how to build these scans if you want them. They're almost the same scan, to tell you the truth. But we're going to talk about blue ice failures, okay? So, let's see. Don't get too excited, Rick. Slow down here. I better put the date on here. This is April 11, 2022. Again, thank you, everybody, for being here. Please ask questions, pretty please. It's always nice to have questions. It helps kind of lead the way. So, you know, if you have some things, let us know. When we get toward the end, when I finish up here, because I'm going to get right through this, if you guys have charts you want to take a peek at, we'll certainly do that and answer whatever questions I can possibly answer. So, all right, let's get started, okay? Let's do that. So today's topic is going to be looking at a blue ice failure. I'm going to come over here to a naked chart first, and let's just get rid of all that right there. And we'll use, actually, let's just use the SPY. Okay, let's talk about a blue ice failure. So this blue line here, this is the 50-period moving average. The blue ice failure was, to my knowledge, and I'm pretty like 99.9% sure of this, unless somebody tells me something different, was actually created by a guy named Dave Elliott. Some of you might know him by his screen name, First Wave. And to me, it is one of the best shorting techniques out there. I don't even hardly look at anything else because it's such a good shorting technique. And so hats off to Mr. Dave Elliott, First Wave there. So here we go. So the blue line is the 50-period moving average. And the whole idea is that, there we go, that the bulls are kind of getting right along. And then all of a sudden they break down through that 50-period moving average. Now, this, and the way I'm going to look at this might not be exactly like Dave Elliott, First Wave, looked at it. This is my take on it, but the basic totally from him. So this is a shortable area when we go through that 50-period moving average. Also, when we rally up, well, let's do this a little differently. Say we rally up and we test and then come back through, that's a blue ice failure as well. This is a blue ice failure. We actually broke out, but you can see we came right back down. If we look at this here, this is a blue ice failure. Now, keep in mind, we did not touch it exactly. That's okay. There's no problem there. Here we rallied down, we came back, we've got another blue ice failure, and down we went for some good shorting monies right there. So as we came up, we could have, this is the SPY, by the way, we could have saw failure right there, and that would have been a shorting, possible short there. But you can see that we did not fail there, so this is not a blue ice failure. Ron, it's the simple 50-period moving average, okay? Simple. Thanks for asking. So look where we are now. We are right here back to that 50-period moving average. So are we set up for that blue ice failure again? We sure could be, yes. Are we set up to break down, come back up and rally and fail? Yes, we could be. On the bullish side, are we set up for the buyers to come in and move us up? Yes, we are. This is one thing about the 50-period moving average that makes it so decisive. And this is not just with the SPY, it's with any chart. There is a massive theory out there, and I'm not here to say whether it's a right, correct theory or not. I'm just saying there is a massive theory out there that stocks above their 50-period moving average are bullish, and stocks below their 50-period moving average is bearish. So why not take advantage of that? Whether it's true or not, I mean, I'm not here to say that one way or the other. Let's look at what the group of traders think about it, and that's what they think. So if the group of traders out there, I'm gonna change colors. We have too many up there now. If the group of traders, like this right here, the group of traders, the stock market, you, me, hundreds, thousands of traders, if they look at this and they say, okay, we're below that 50-period moving average, why not take advantage of that? On the other hand, if they're also looking at it above the 50-period moving average, why not take advantage of that? So here comes the blue ice failure, right? And I just went through what it was. The really cool thing is I've created a scan over here that combines the weekly and daily. Anyway, we'll go through those and I'll show you what I mean. Let's see, Rick P. How about if price is below the 50 and 200? Is it still a strong? Let's just say it's a strong bearish. Now, let's just say it's bearish. Let's not use words like stronger necessarily. Because I could actually make an argument that if a stock is below the 50-period moving average and 200-period moving average, if it's really oversold, I could make an argument it may not be the best short out there on some trades, okay? So ultimately what we're looking for are charts in a downtrend. Ultimately, that's what we're looking for. And we get below that 50-period moving average. That's one of the most major moving averages there is. So when price gets under there, we look for that short. Now, to go along with what you're saying, the red line right here, that's the 200-period moving average. So I agree with you, and I think that's absolutely true. I'm just going to be a little bit reluctant to use that word stronger is all. That's all. But I agree with you. Okay, great. All right. So this was the first scan right here, and let's go take a look at it inside. The first thing I want, and if somebody wants to write this down, you can certainly do that. If I go too fast, I'll come back and do it again, because really it's kind of simple. It's not that hard. This is also being recorded. So the recording will be made available, and I don't see any reason why I couldn't get it out today. Today's a very slow day. I could do that. So, but anyway, we'll come back if I go too fast here. So I'm looking for the spread of averages. Now, one thing I like to see, I'm going to move this over just for a minute. Here's what I like to see. Price going from one moving average to another moving average. I like using moving averages. This, of course, would be the 50-period moving average. This is going to be the 200-period moving average. So if I'm looking at if I'm looking at a chart and it's bullish, traveling up its 50-period moving average, and then all of a sudden it cracks down through that. Oops, there we go. We crack down through that 50-period moving average, and we want to make that red. And then let's say we come back up, and by the way, that's a shortable area. We come back up and we fail. This is also a shortable area. What I want is the 200 period moving average down below me. Now, Rick P there mentioned what if price is below the 50 and the 200. That's a completely different trade setup for me, but we can certainly use a bounce off that 50 period moving average and call that a blue ice failure. We could also use the bounce off the 200 and call it a red ice failure. Really what you're looking for is bearishness coming off of a major moving average, okay? That's in a nutshell, that's what it is. So I like moving averages, so this is the way I have this one set up. So the idea is we fail below that 50 period moving average, and then our next target below is in the direction of, or maybe to, that 50 period moving average. Okay, we can do that on the daily, or we can do that on the weekly. Now, what I decided to do was do this on the weekly. I'm going to take AMD as an example. Let's unload that. So let's look at AMD. Now see here we're failing that 50 and 200 period moving average right here. Clear as a bell. We could actually call that a 50 failure, a blue ice failure. We could call it a 200 ice failure if you want. I mean, clear as a bell. Well, now if we look at that weekly chart, check out that blue ice failure that's going on. Blue ice failure. So for me, this is going to put some targets down in this direction, my moving averages. Now I want to just kind of pump the brakes here for a second, because while those are targets to the downside, I'm also going to pay attention to price action. So I might put a little bit of a line right in there as a target. Targets are like, well, targets are kind of like, yeah, I hope we get there, but I'm sure as heck not going to be stubborn and say the chart does something like this. If it does something like this, I'm not going to sit here and say, well, the 200 period moving average is going to be my target. That's just going to put you in the poorhouse. Ultimately, you want to follow price. We need some areas to the downside that might give us some ideas, right? So that's where I start. But I'm still going to be looking at price action as well. So for instance, right here. So this first one I've added outside of the 200s. These are both 200 period moving averages here. About right here in this 85 area. Then we're going to come down to this next one, this one, and I'm going to set it at about 69.50, and it's where those two candles got together to push us higher, okay? So that's how I might come up with targets on this, all righty? Now let's see. Jim is saying January 21 May from support. Could be, Jim. Could be. I need to get through this project before we get, you know, on something else that leads us away. All right. So what I'm looking here at is the spread of the moving averages on the weekly chart, and I'm looking for a spread of 12%. Now you can put anything you want in there. Actually, I paused there because I think this other one is set at 10%. That's okay, though. What you need is that spread. And that spread, it helps with targets to the downside, some possibilities to the downside. And what I want is the close of the simple 50 period moving average and the close of the 200 period moving average simply spread out, and I can adjust it here 12%. I can make this 9% if I want, okay? I can make it 9% if you want. Any number you want in there. 12% is what I'm going to use. And then I want price relationship. And this is just another way to make a trap. There's actually a scan in there that you can actually build just the word trap, and you can fill this in and it'll do it. I've gotten to where I kind of like to use the relationships myself. Don't really know why. I just do it that way. So right now, this is price relationship to moving averages, what it is. Yeah. So here I want price less than the simple 50 period moving average. That's simple. I want price less than the simple 50, and I want it on the weekly. And this one here, there we go. This one, it's the same scan. I'm just going to change things here. Now I want it greater than the 200 simple moving average. So by doing that, what I've done is I've said, whoops, that's the wrong one. I've said there's the 50 period moving average, and there is the 200 period moving average, and I want 12% between those two moving averages. And remember what we're going to do now? We're going to look for that that failure, or maybe it has failed, and then we're going to look for the buying opportunities in this area here, looking for that 200 period moving average to draw it down. Very similar to this AMD right here. Okay, the next thing I want is, for those of you that don't know, and we don't talk about this one very much, but there's a scan in here called near below average. And yep, you guessed it if you're thinking it. There's also one called near above an average. So what I want to do is, while let's see, can I make this stay on top? Nah, we'll move it over there anyway. So if I'm buying this, I want to buy this near that 50 period moving average rather than down here. I don't want to buy it down here. I want to buy it near that 50. And you can adjust that to whatever you think is near, okay? So I think I have this one set 5%. Within 5% of the 50 period moving average is what I'm looking for. And because one, I don't want to chase, and two, again, I don't want to buy it down here. This is the direction I want it to go. This is the direction that's going to make me happy, making a buck or two, if I buy it near this area here. Let's see, Blair, can you send me the link for the free trading room app access? Actually, Blair, if you log into that room after this, I'll put the page up there for you to do that, okay? And to, just so you know, and everybody else knows, you have to be in that room to pair that app regardless. You do not have to be in the room to get any kind of alerts, but you do have to be in the room to pair it. And you have to log in once a week, okay? All right, so does that make sense? All we did was put a trap together using the 50 and the 200 period moving average. We want to look for entries near the 50 period moving average, and what we want is price to drop toward the 200 period moving average here. And all of these are set up on the weekly, okay? So now let me close this. So let's take a look at some of these. Let's look at DLR, and you see how we're near that 50 period moving average right there. That's what I'm looking for. And we'll go through more here too. BLL, see how we're near that 50 period moving average, and see here's the 200 down here. So what I'm looking at is the possibility of a 26% move. So the setup, here's the setup. Now from there, we'll manage with price, okay? Let's go look one more. We'll look at Google. Google, there's Google. Check it out. That's pretty, isn't it? To me it is. That's pretty. Look at that blue ice failure setting up on the weekly chart. And down toward that 200 period moving average is 58%. Now, I'm not saying that's where it's going to go, but if you're using moving averages, two of the most popular, two of the most used moving averages in the world is the 50 simple and the 200 simple. So a lot of times you'll see price bouncing off the 200, off the 50, both long and short. And that's where we simply just want to take advantage of that that scenario that happens goodles of times. Goodles, trading word for the day, goodles. So not that I'm saying we're going to see 58%, not saying that at all. Now I'm going to come in here and I'm going to look for some price action. Where might I consider other areas as targets? And here I'm just simply using price over here on the left. That's it. Okay, that's all I'm doing. Maybe we'll one in here. Yeah, maybe one right there. We don't even need that one, right? So you can see the possibilities, and if you didn't have any of those lines in there, which who cares, now you're just trading price to the downside. Okay, any questions on that? Any questions? Please don't be bashful. Please don't be bashful. You're here to learn more about trading or to get ideas so you can make money in trading. So the thing about today is make sure you walk away today with a complete understanding here. Whether or not you use it or not, anytime you go to webinars, you watch videos or anything, you know, somebody might say, well, I'm not interested in that. Just hold the phone for a minute. Pump the brakes a tad. Right, you may not be interested, but there might be something in there that just gives you good information about trading all together. Okay, all together. T is saying, does the T line figure into any of this? Oh, but the rest of the story is about to come, T. Yes, it does. Yes, it does. Carl, can you use this strategy using options? Carl, you can use a chart is a chart is a chart. And options is just a tool to trade a chart. So the simple answer is absolutely. So let's let's just say RF here. All right. So can you trade options on this? I mean, you've got that blue ice failure there. Here's the 200 period moving average. I think most of us can clearly see that we have somewhat of a top. You know, there might be a good argument for a bearish side here. Absolutely, there might be. Again, that blue ice failure. So can you trade options? Sure, why not? I'm going to do this for you. Let's see here. So the only reason you can't trade options is if it's not an optionable stock, or maybe it doesn't have enough open interest, okay? And we're not scanning for open interest. And I'm not scanning for only optionable stocks. I figured somewhere along the line, you know, can't do everything. So let's type in, what was this? RF. So here's RF. First thing I'm going to do is at least go 39 days out. So right over here. And this is the bearish side. So I'm going to look for open interest. And right here, even at the money, I guess, there's enough open interest there. Plenty open interest for this. But only a 44 delta. You might not want that. I don't see that good of open interest on anything else. I mean, for smaller accounts, 424 might work. Let's go see here. Again, there's not a lot of open interest. So is this a shortable? Can you trade this with options? You could, but it doesn't meet my open interest criteria. And everybody's a little different. So let's take XLF. I'm going to move this over just for a second. click on XLF, and then I'm going to bring this back. There we go. So here's XLF, a blue ice failure, right? Now, XLF, is it shortable? Of course it is. The question you've got to ask yourself is, does it meet your criteria? So here's 39 days out, which might be too short for some people. But look at that criteria. Oops, we're over here, sorry. Look at this criteria. Here's a 77 delta, 20,000, 23,000, 63, there's 13. That's extremely shortable, yes. So remember that options is not some super secret, you have to have a handshake kind of a thing. You know, we all have special rings that says, you know, we're in the option club. Option is just a tool that you use to trade a chart. So that was a really long answer to absolutely these are shortable. Absolutely. Michael, what do you set your time frame to? Michael, if you'll hang on, I think I'm going to answer your question and T's question here in just a moment, okay? In fact, thank you for asking. Leah, do you have the same scans for TC2000? I don't, no. I do everything. I do everything on live trading alerts. Look, this is going to be harsh, but you know, if you have a choice to use the best tool or the second best tool, which are you going to do? I'm going to use the best tool. And and I'm not saying you can't create these on TC2000. You can create them on any platform you have. But why would I want to do that when this live trading alerts is about the coolest thing since sliced bread? So sorry, I don't have them for TC2000. Okay. Chris, also consider bid and ask spread liquidity, especially during periods of. Yes, Chris. Okay, and I'm sorry, I'm just skipping over that because that's getting out of the scope of this webinar. Okay. All right, now I want to answer some of Michael's and T's question here. Okay. Now that's the second alert. Second alert. I want to go through this alert first, and then we're going to look at charts. The spread of the moving averages, it's exactly as before, except this one is 10 for no good reason. Okay, it could be 12. It's not a problem. What I really want to point out, it's the weekly, and then here's the 50 and the 200. We already went over that, and you know, it's the same thing. Price less than the 50 period moving average. I want to point out this is the weekly. Here's the other piece of the 50 period moving average and the 200 period moving average. This one being the 200. There's the 200. I want price greater than the 200. Again on the weekly. Again on the weekly. Now, here we're going to get into this near moving average a little bit. And we touched on that in the other scan. Again, the weekly. I want it near the 50 period moving average. I want it up here. When you're long, you want to buy low, sell high. When you're short, you want to buy a high and sell low. So I want to buy a high. I want to sell low. All right? And I'm just asking it to be 5%. You can change this to 10% if you want. This is completely adjustable. I just have it set for 5%. That's all. Now, notice I have a bunch of these here, right? And notice we're on the weekly. Near below, all of a sudden, let me make sure. Oh, yeah. All of a sudden, we switch to a daily, okay? A daily. Because now we're going to start looking for entries, and I'm going to answer what part does the T-line play in this, and a little bit of what the trend indicator plays in this. So I've got near, below the trend indicator. That's the exponential moving average, the 17, and I have this set at 5%. This could be a little wide. it might be a little wide, and I need to, as I look through charts, I might have to tighten this up to 4%, something like that. But I think for the purposes of this, I think it's going to work out just fine. The main thing that is set to the daily, and it's near. I should do that. So what I'm asking for is near the 17 exponential moving average and a maximum of 5% below. For some people, the light bulb just exploded in your head. It exploded for me today. I got to tell you, not this. These next two. It just my head just went nuts today when I did this right here. And what I was trying to do, here's what I was trying to do. I was trying to create a trap using the 3 and the 8. And I want to stop for a moment. And I hope everybody realizes all the 3/8 trap is, whether you're long or short, all it is a mechanical way for you to buy or short near the T line. That's all it is. That is all it is. It's a mechanical way for you to buy near the T line or the 8 exponential moving average, right? So I thought to myself, can we do this? I really did. I called Ed. You can ask him this morning because he had to guide me through a couple of things. I was wondering if I needed to make another group over here to do this, but I don't. At first I thought I did, but then I realized that I was complicating it. So now this one here, first we're on the daily. Remember, the first part of this was the weekly. The first part of this was this very first scan that I showed you. Very first scan. Now what we're going to do is tighten it up where you can actually do some buying and selling off the daily chart. So now I want to be near or below the 8 exponential moving average. And I have put a 4 in here. So it can be below as much as 4%. And that's adjustable. And I may find where 4 is too much. I might have to adjust that to 3. I contemplated that, but I'm going to leave it at 4 for right now. Okay. Now, let's come over here. I want this again on the daily. Now I want near or above the exponential 8 period moving average by a maximum of 4%. Now, for another group of people in here, your mind just exploded. I know it did. I know it did. I know what you're thinking right now. He just created a trap on both sides of the T line, and for the purposes of being short, less than the trendicator, right? Remember this one right here? Below the 17, which is the trendicator. And for anybody that wants to use like a 20 simple or whatever moving average you want to do, you can do that. Okay. So what we've done is we've said we want a weekly blue ice failure, and we want a daily entry around the T line, near the T line, or a trap, or a 3/8 trap, both a bullish 3/8 trap or a bearish 3/8 trap. So let me close this up, and then let's take a look at some of these charts. So let's look at APH here. First of all, are we on the weekly? Yeah. Look at that weekly setup. Beautiful, beautiful blue ice setup. And there's the 200, the ultimate target as far as I'm concerned. And I'm not saying it can't go lower. It sure can. It sure can. But I'm completely, I would be ecstatic with 21%. And let's just, if this tree is going to, if we're going to climb down from this tree all the way down here to the ground, let's climb one branch at a time. Now, remember, we're going to look at this on the daily for an entry, right? And there's the daily, and we're near the T line. Now, like I said, I'm thinking about tightening that up. But if you look at this, you're only 2% away. You're less than 2% away. But you can tighten this up and you can get them just snugged up right in this area. Let's look at PKI. And notice I'm not making this stuff up. This is coming right off these charts live. Let's start with the weekly. Look at the weekly blue ice failure. Look at our 200 period moving average target down there. And what do we have? 29%. Let's go to the daily chart. We're right there at the 200 period moving average. Does that make sense? Cisco. Look at Cisco. Blue ice failure, 200 period moving average. What do we have here? 7, almost 8% right now. And here is the daily. Yet Friday would have been a great place to short. It got a little carried away. You don't want to chase it right now today. Does that make sense? Anybody? And see here, I'll tighten this up for us right now. So how about we go, and that's going to cut us way down, no doubt about it. Stop scanning. 2. Let's try 2. Okay. And then we're going to change this one because that could also be 2. And it may tighten up to where there's not any. Let's rescan this. Scooby-Dooby-Doo. Oh, rescan, not stop. Rhonda, this makes sense, doesn't it? Doesn't it look like a good setup? And then from there, you're using price to make that entry. That's where you might use that daily chart. Or if you're an intraday chart user, you could certainly do that. So we got to wait for this to scan before anything comes up. I do have this set to 15 minutes. It just means it's going to alert when it's a 15-minute high or 15-minute low. The overall scan here is still looking at the weekly and the daily. Oh, okay, there's still 24. Impressive. So let's take, well, there's the diamonds right there. There's the diamonds. That should not be. Did I do something? Did I mess something up? Maybe, you know what? That's because I have to let them come up here. There may be some that pop up that are in the system, but if they don't qualify for everything, then that may keep them out there. All righty. Anyway, I think this is about one of the coolest things that I've put together in a long time. I really do. Okay. Oh, what did I do to this thing? Now, see, I went messing with it. What did I do? Near 2%. Near 2%. Shouldn't have messed anything up. 17. Oh well. We'll figure that out later. All right. Any questions at all? Any questions at all? Anybody? We can look at charts if you like. If you have other scanner questions, we can certainly look at that as well. Anybody typing? Otherwise, it's going to be a short day because I've done my webinar. There we go. SBLK. Blue ice failure. Yes, it is. Yes, it is. Blue ice failure right there. Actually, very nice. Very nice. See how we've been bullish? Price up here. Here's the 50 period moving average. Now all of a sudden, price broke through. We tested and we're failing. There you go. Nice. That is definitely a blue ice failure. Samar, absolutely. Here, let me show you something. You can scan. Here's all the time frames you can scan on monthly, all the way down to 1 minute. You can have them on alert anywhere from monthly down to the 1 minute as well. So scans themselves, the shell of the scan can be set up on any time frame you want. And then you can set it up to actually be alerted on any time frame you want. And by the way, this can be the same time frame as this. So for intraday. So if you want to trade intraday, let's say a 10, whoops, well, I won't save it. A 10-minute chart here, then you might want this set at 10-minute as well, perhaps here. I don't use intraday, but this is absolutely set up that way, where you could do anything you want on the intraday side. Let's see, Dick is asking on BLL. BLL. There we go. Let's get rid of that. There we go. Today's, let's see, with BLL moving up today and crossing the 3 EMA, is it still a candidate? Absolutely. Absolutely. Bill, this is a candidate until you break that downtrend and you make a low, high, higher low and break out. As long as we are underneath these major moving averages right there, you bet that's a candidate for sure. Absolutely. Here's the weekly chart. We're still a blue eyes failure. Okay. Now, this is a good time for me just to stop for a second, and I want to go look at the market overall. As I mentioned this morning in the pre-market talk, I want to be careful being short because we have not broken through the daily period moving average, daily 50 right in here. We have broken below the 200 period moving average. So this is going to be a major either a green light or a red light. Go for it or don't go for it. Right now, my foot is on my brake pedal. Both feet are on my brake pedal right now. Just pumping the brakes. Let's just wait. So while this is like this, I'll be that way. Below that 50, then everything out there is game to short. Just like above the T line here, turn those red dots green, everything out there is a possible long. So what was it, BLL? And I just wanted to make sure that we talked about that. Is that still a candidate for a short? Yes, it is. Is it the most optimal time to buy it? No, it's not. The weekly chart, that is still screaming short until it's not, which would be back above that line. The daily is still screaming short until we move above this line or create that low, high, higher, low, higher, high. Okay. Can you scan pre-market? Yes, Ron. That is all the scanning I do anymore is pre-market. Yeah, I have my scan set to. This is one of my RBB scans here, my roundabout and breakout scans, and everything is set to daily plus. Daily plus. The plus means pre-market. So and then post-market as well. So I have everything set here. So when I turn my computer on in the morning and I look at my scans, if I'm here too early, they're quiet. The market's not doing anything. As we get closer, and I'm going to say, let's see, I have to think about this. What time? 6:30. 6:30, 5, 6. Yeah, 6:30. So 7:30 Eastern, they start getting, 6:30 they start getting a little active. 7:30, they're even more active. And then, of course, more so. Anytime after 6:30 they start. And then, the closer we get to the close, the more heated up they get. But that's exactly where I scan for all my charts. I have my scans up there. And then what I do is I look around. What's moving? Oh, that's moving. That's moving. That's moving. And that's how I do that, along with charts that I flag throughout the day. So today I'm flagging some charts that I'll look at in the morning, along with what the scanner might be giving me. So another one of those long answers to an absolute yes. Absolute yes. Okay. Oh, let's see here. What do we got going on? Any other questions? Anything? Any? Otherwise, we'll just, we'll call it a day here. XLF still looking a little short until it's not. Here's a stock. Keep on your watch list. Telray. I'm not ready to buy it. This is a rounded bottom breakout, and I'm just waiting for the buyers to give me a sign. I've tried to make a pact with myself, and I told myself, I said, self, I'll make you a deal. I won't smash your big toe with a big hammer if you promise not to bottom pick. So my toe has not been smashed yet. I'm not bottom picking. I'm waiting though, and that's okay. You can wait. But I'm waiting for the bulls to step up in this, and then I'll look to buy. And by the way, I'm not looking necessarily for some big green candle. What I want to see is a low, a high, a higher low, and a higher high right here. I'm perfect, and I'm not saying that's where the high is going to be, okay? I don't have a clue where it's going to be. I just want to see that chart pattern. And then this becomes the tradable bottom. This is not the tradable bottom for this chart, in my opinion. Up here could be, absolutely, with that chart pattern. Anyway, it's one I've got my eyeballs on. Hey, thanks, Nelda. How are you doing? I appreciate you watching my YouTube all the time. I really do. Thank you very much. You're always so kind to me there. Appreciate it. Let's see. Lucho, I apologize if I destroyed that. I do apologize. Tuned in late. The T line is the 8 exponential moving average. Yes, it is. And the trend indicator is the 17 exponential moving average. Yes, it is. Yep. Yep. When I was messing around with this, I did something, and I don't know what I've done. But I sure have done it. Anyway, I'm not going to try to mess with it right now. All right. Anything else we have going on? FIS, if anybody is interested in a rounded bottom breakout, I have a handful of scans doing different things for the rounded bottom breakout. And here this one is. FIS is one that I'm watching for an entry. Maybe the reason I'm not trying to enter it now is because the market is not in my favor. The market is not in my favor. Also, UVXY, in my opinion, this is a bullish setup here, like that. So I have to be a little reluctant in going into too many longs. So I'm going to sit tight until that changes. Here's another RBB setup. Setting up right here. Alrighty, I think we're all good. Last minute questions. And then we're out of here. I do want to thank everybody for being here. I appreciate it. If anyone is interested in trying the scanner out, there is a 14-day trial, totally free. I do mean totally free. You don't even have to give Ed your credit card number. He doesn't want it. He doesn't want it. So, somebody asked me this the other day. Let me answer this, and then I'm gonna run out of here unless more questions come in. Why is this arrow green, but yet we're not? We're bearish. Why is that? Why is that saying green and pointing up? Now, because I have this set to alert on a 15-minute chart, okay? So let's do this. I'm going to change this to a 15-minute chart, and you can see it's green. Um, I don't know what Excel is doing. Here's the 15-minute chart, and there's the daily chart. That one's green. But anyway, the reason is because I have this set to 15 minutes. Okay? 15 minutes. So, oh, thanks, Ed. There's that link for the 30-day, 30-day or 14-day, 14-day, 14-day. I may have said 30. I apologize. 14-day trial. If anyone wants, if you do this, if you download this, I'll be more than happy to help you come set this up, and even a couple other scams. I'll be more than happy to help you set that up, so you're not on your own. And please never be on your own. Ed's always there to answer questions. And with that said, no one's asked a question in the last 2 minutes, so we must all be done. Everybody must know everything they need to know about the scanner, and you must have every question answered about any stock you were curious about. All right, you guys take care. We'll see you on the other side. Thank you very, very much.